A trailing stop is a special feature allowing you to set a stop at a certain distance away from a trading instrument's current market price. Think of it as of the standard stop-loss order's cooler, more flexible cousin. A trailing stop is set below the current market price for long positions and above it when you're going short. Its biggest perk is that it lets you accumulate profit until the market turns against you. Your trade remains open and generates money while the market is going in the right direction, but closes and lets you cash in if that direction reverses. With a trailing stop, you no longer need to keep a hawk's eye on the markets where you have open positions and adjust your stop-loss orders. Let's take a look at an example. You buy Apple shares at $125 each. Apple then releases a groundbreaking new product, say the vacuum cleaner, and the stock price skyrockets to $200 per share. At that point, you set a trailing stop at $5, $5 away from the current market price, or at $195. The market continues to rise and reaches $215 USD, and your trailing stop follows just $5 below. Then people start realizing that the vacuum cleaner is not really that cool at all. Sales drop and stock price falls down to $210, with a tendency of continuing that trend. This is the level where your trailing stop is executed, your position is closed, and you have successfully protected your cozy profit of $85 per share. Neat, right? To set a trailing stop, just pick any of your open positions and click on Set, either in the stop loss or take profit columns of your positions window. Set the trailing stop value in the ticket window that pops up and click Save to confirm it. That's it, you're good to go. You've never traded with a trailing stop before. Open a free demo account today and get acquainted with this feature with absolutely no risk.